I think that by the end of this year, or certainly by next year, we're going to see the numbers getting bigger again, and that ultimately we're going to eclipse the peak of year-over-year CPI that we've already seen. So inflation is not conquered, not even close. Now, this is going to take probably a generation, to rebuild what government destroyed.
In today's video, Peter Schiff, founder, CEO and global strategist of Euro-Pacific Capital, gives a warning that the 2008 crisis was just the prelude to a larger sovereign debt crisis in the United States that may lead to a collapse of the US dollar.
What your thoughts are of how the Fed may interpret that data and maybe some of the things that you think will happen next. Your thoughts?
Well, the Fed may try to use the general interpretation of that data as an excuse to pause its rate hiking. It's probably been looking for an excuse to do that for a while. And so I think it may try to hang its hat on the CPI numbers that are not quite as bad as they were. But if you look at the numbers, we're still looking at 5-6% inflation as measured by the CPI, which I think understates by design just how big the price increases actually are. So if the CPI says 5, it's more likely 10. So we have pretty high inflation, even if it's not as high as it was last year or 2021. But also, I think probably more significantly is the improvement that we've seen in the inflation numbers, where they've come down a bit. I think that's transitory. I think that by the end of this year, or certainly by next year, we're going to see the numbers getting bigger again, and that ultimately we're going to eclipse the peak of year-over-year CPI that we've already seen. So inflation is not conquered, not even close. I think this cycle is just getting started, and we're going to see new highs in the year-over-year inflation rates. The inflation that we're currently dealing with, the Fed has been creating it for more than a decade. You really have to go back to quantitative easing 1 in 2008, 2009. That's where the Fed really started the money printing in earnest. And we're dealing with the delayed consequences of that now. I mean, inflation by definition is an expansion of the money supply. And so we dramatically expanded the money supply. The consequence of that is prices have to now adjust to a higher equilibrium, given all the money that's now available to buy stuff. And so we've just started that adjustment process. And I think prices have a long way to go on the upside just to catch up to the inflation that's already been created. But I think paradoxically, one of the reasons that I think the CPI numbers are going to spike to new highs soon is all of this optimism that inflation is cooling down has caused the dollar to drop. And I think the dollar will continue to fall. It's now down about 15% from its high last year. But I think it's on the precipice of another major decline. I wouldn't be surprised to see another 15 to 20% drop in the dollar between now and the end of the year. And I think that dollar weakness, which is a consequence of people starting to price out some of the rate hikes that they had priced in fact, starting to price in the next round of rate cuts. Also, the Fed has quietly returned to quantitative easing while pretending they're still doing quantitative tightening. So all this is dollar negative. And what's going to happen as the dollar weakens, that's going to push up commodity prices across the board, oil in particular, but lots of other commodities are now going to be breaking out to new highs. And it was the pullback in those commodities that helped bring down the headline inflation numbers. But I think when they start soaring to new highs on the back of a weak dollar, that's going to help drive those CPI numbers to make new highs.
Based on your theory and your analysis, if you look at the de-dollarization of the US dollar and what that might look like globally, you see what's happening with China and the EU, which I feel like there seems to be a little bit of bedfellows occurring right now. How long do you feel like that cycle could take for a full, where the global reserve starts to get parity, much like when we saw the dollar and the pound kind of global reserve? What do you think that cycle is in terms of time?
Yeah, I think it's going to happen a lot quicker than people think. I mean, it's already taken a long time. We've been kicking the can down the road on this for many, many years. So it's long overdue. But, there's an old expression, how did you go broke? Well, slowly at first, and then all of a sudden. And I think that describes what's been going on with the United States. And I think that when the dollar crashes, it's going to happen abruptly. And the dollar's reserve status is going to be lost before anybody realizes that it's happened. And I think that the writing is there on the wall for anybody who wants to take the time to read it. If you look at some of the events that have taken place ever since we were foolish enough to weaponize the dollar and apply sanctions onto Putin, I think that really highlighted the need, a political need, for the world to move away from the dollar. I think they already had an economic incentive to do so, but then we gave them a powerful political incentive to accelerate the process to de-dollarize, and that is exactly what's happening. And, most people don't have a clue to the degree to which the United States depends on that dollar reserve status, because our whole economy is built around a service sector. But without imports, there's nothing to service. I mean, we're just a gigantic logistics center where we distribute merchandise that we import and then, distribute it to the population. But if we can't import all the goods, well, then there's nothing left to distribute. I mean, the whole thing comes collapsing down. And how do we pay for $1 trillion a year worth of imports with our dollars? That's our trade deficit. It's $1 trillion a year in goods. And we pay for it just by printing money. But the money doesn't cost anything to print. It's free. But all those goods require the expenditure of significant resources. Land, labor, capital goes into the production of these goods. And we basically get them for nothing off of the reserve status of the dollar. And the foreigners who are selling us all this stuff, they just take our paper and they buy treasuries or they buy mortgage-backed securities. But when that stops and the dollar crashes, Americans are going to be too broke to afford to import stuff. And we don't have the capacity to produce what we'll no longer be able to afford to import. And so it's going to be a collapse in the American standard of living. And very few people are prepared for that. It's going to happen. You're going to see it through a massive depreciation in the value of the dollar. So yeah, the smart money is buying gold. I mean, they've been buying gold for years because this train wreck was obvious for years. But now, it's happening. Gold is, I think, this morning at 2,040. I think it's headed significantly higher from here, multiples of its current price. And if people were smart, they would take their money out of the bank, their long-term savings. I mean, obviously, if you need money in the bank to pay bills, short-term operating cash, leave it there. But for longer term, don't leave any long-term savings in the bank because you're going to lose it. Either the bank's going to fail or the money's going to fail. But either way, you're going to lose. So you got to take your money out of the bank and do something else with it. You could buy gold and silver because it's much, I think, safer than owning cash. Or you can invest it. That's what I've done. I mean, I have both. I have gold and silver. But for myself and my clients, we own good dividend-paying value stocks all around the world. These are real assets that are going to retain their value as money loses its value. And if you own a good business that has real assets and that sells products and services that customers need, then you can raise your prices and you can maintain your margins in an inflationary environment and you can raise your dividends, which is what I'm counting on. And since the income that the companies that I invest in are earning is coming from outside the United States predominantly, so it's coming in other currencies, which I expect to rise versus the dollar, then my dividends will go up for that reason as well, as you translate them back into cheaper dollars.
If our consumption society, and I say ours, meaning the United States, if the consumption society goes away and we're not able to actually pay for those goods, what does it do to the number 2 country in the world?
Well, I think that's going to be a huge win for China because it's not like we've been doing any favors to China by taking all their stuff off their hands. They could use that stuff. The key to growing your standard of living is production, is to increase the supply of goods and services available to your own people. Not to just produce a bunch of goods for some other country's citizens to enjoy. And so what's going to happen when the dollar crashes in relation to the Chinese currency, then as Americans become poorer, the Chinese automatically become richer.
Yeah.
And now the Chinese will buy the products that Chinese factories and Chinese workers are producing. And so instead of just getting our paper in exchange for their labor, they're going to get to keep all their stuff. And so they're going to get to enjoy the consumption of all those goods that they were doing without, because the fruits of their labor were being shipped over to the United States and they were getting stuck with it with a piece of paper. So, but on the other hand, on our side of the Pacific, we're going to be stuck with our paper. We're not going to have all those goods that we used to be able to buy. We're just going to have a bunch of paper and nothing to buy. Right? So prices go way up. We get stuck with a bunch of inflation, and the Chinese get a higher standard of living because now they have more stuff to consume themselves. Now, they won't consume it all themselves. They'll trade more with other countries. But the countries that they will trade with will be countries that have goods that they need that they can import in exchange for their exports. So they're going to work to earn products, not work to earn U.S. Treasury bonds or our mortgage-backed securities. But the world has been propping up the American economy for decades. We have had a giant subsidy, and we've given the bill to the rest of the world. And I think the part of the world that has suffered the most, the cost of this subsidy, has been the emerging markets. And I think the emerging market consumers are going to get the most relief from America's collapse.
Is there any hope for that, do you feel, or do you think we are so far gone in this scenario right now that the United States could not necessarily? I mean, this is the greatest world of opportunity, or greatest country in the world in terms of opportunity, greatest innovation, greatest ideas, smartest, I would say, the smartest minds in industry. Why would that not be able to be recovered if we were checked against the glass?
Well, we could do the right thing. And in fact, doing the right thing, would be not nearly as difficult as it might have been in the past. In fact, I'm very excited about what's happening with artificial intelligence, and that may make the process of reindustrializing easier and more efficient for the United States. But the biggest problem is that we're our own worst enemy, and we have to overcome democracy. And a lot of people think that democracy is a good thing, but it actually is a pretty bad thing, especially if you need to make fundamental changes in the structure of an economy, because the political forces will be pushing back against that because it requires significant cuts to government spending. And nobody is willing to do that, especially when it comes to middle-class entitlements like Social Security and Medicare that need to be cut. See, unless we can shrink the cost of government, we can't deliver relief to the economy in the form of lower taxes or lower inflation. Because right now, the way we're paying for all this government is through taxation and inflation. And so if we want lower inflation and lower taxes, which is what we're going to need to reindustrialize, we have to dramatically cut government spending. But no politician is willing to do that because they're worried that they'll lose their next election, because people will use those spending cuts against them, and so they'll be voted out of office. And so most American politicians care much more about their own reelection than they do about the country they're supposedly elected to serve. And so it's very difficult. Meanwhile, most people are dependent on government now. They get a check from the government in one form or another, and they've been so dumbed down by American public school system, government schools. They don't understand free market capitalism. There are a bunch of socialists now that are voting in these polls. And it's very possible that when we get this huge economic collapse that's coming, the politicians will blame it on capitalism. They'll say, you see what happens when you have profit and greedy businessmen? They wrecked the economy in 2008, and now they wrecked it even more. And it may end up being a springboard to go all in on socialism, and for the United States to completely jettison what remains of our free market system, destroy the rest of our Constitution, and become a totalitarian, centrally planned regime, something like, Cuba, And so we could be going down a very, very dark path as a result of what's going to happen. They had hyperinflation in Germany, and they ended up with the Nazis and Adolf Hitler. So, bad things can happen, in the type of economic environment that we could find ourselves in. But yes, if we did the right things, then yes, we could have a amazing recovery, but it will take time. You just can't wave a wand and recreate all the factories that we lost and rebuild the supply chains and educate the workforce. Now, this is going to take probably a generation, to rebuild what government destroyed. But the sooner we can get started, the sooner we can finish the process.